Hello and welcome to the 24/7. My name is Niharika Valia and I am with you with the area of accounting and finance for managers. And we are working towards the JAIIB May 2023 attempt. As you know, we are dealing with accounting. I'll be moving forward towards the next level of accounting today, which would be relating to the entire topic of accounting in terms of the basics. And now we'll be moving towards the advanced level as well. So if we move forward towards that advanced level, the topic that I'm taking up today is the various kind of accounts, their functioning. So let's begin with that topic. Our year-end sale is here. Under the sale, you will get up to 81% of discount along with the double validity on our Mahapack. So if you're looking forward to it, then kindly go ahead and check it out. It is available at on you can use our code Y541 and it would be available to you. The double validity is available on all our Mahapacks. Along with that, the flat 81% is available on all our JIB and CIB products, be it subjects or in terms of our entire courses. So if you're looking forward to it, then kindly hurry up, as you can get the packs at the lowest price because the price rise would be there from 1st of January. So this is the perfect time to purchase our products, right? Okay, here comes the first question, everyone. This question is about trading account. When we talk about the trading account, this is an account which is prepared to find out the GP or the gross loss, the NP or the net loss, none of the above, or the cost of production. The trading account is basically an account which is prepared in order to find the net profit or the gross profit. Okay, let's talk about it. Trading account is an account which is prepared to find out the details of production, whether we are making any profit or loss in terms of our production. That means we find out either the gross profit or the gross loss. That is something which we look forward to when we are dealing with the trading account. Trading account is basically a nominal account which deals with the submission of all the accounts of the business which relate to the area of profits or loss of that particular business. So it's either GP or GL. Which of the below is position statement? Trial balance, profit and loss account, balance sheet, or BRS? Let's talk about this as well. When we talk about the accounting, first of all, we prepare the journal, then we prepare the ledger, then we prepare the trial balance, then we prepare the profit and loss account, and ultimately we prepare the balance sheet. So when we talk about these two are not of any specific nature. Trial balance is basically a statement. The profit and loss account is the one which has a proper nature. It's a nominal account. Among the following, only this has a specified nature. Rest, none of these have a specified nature in terms of real, personal, or nominal account. It inculcates all kind of accounts. This is basically a summary of all the accounts. And balance sheet is again a statement. So we have got two statements, and this is a tabular form, and this is basically each and every transaction recorded separately. So if I'm asking you position statement, so your answer can be reduced, it can be eliminated either to the trial balance or the balance sheet, because there are only two statements there. Rest everything is an account or a tabular form. So when we talk about both of these being a statement, trial balance is basically a summary of everything that the organization is doing, while balance sheet tells us our assets is equal to liabilities plus capital. Whatever liabilities we have, whatever capital we have. So in this case, the correct answer would come out to be C, that is balance sheet. So balance sheet is called the snapshot of the organization's financial position in one particular year, right? That is what we define as the balance sheet. Moving on, the closing stock is entered into the trading account, the balance sheet, profit and loss, or both A and B. Closing stock is an account which relates to the fact that organization is dealing with the end product of the organization. Is it a trading account, P&L, balance sheet, both A and B? When we talk about closing stock, Closing stock is the stock which deals with whatever is left by the end of the year. So it goes into an account called trading account. Under trading account, there's a specific format. Let's talk about that format as well. Once you are done with the journal, then you prepare the tables, then you prepare the trial balance. After trial balance, we prepare a particular account called trading account. Under trading account, whatever we have in the beginning is called opening stock. Whatever we purchase during the year is called purchases. Whatever we sell during the year, that's whatever the sale is during the year, that is buy sales. Here we have to and buy options. This part is called the the debit part. This is called the credit part. This is the expense part and this is the income part. So we know one is an expense and the other one is an income. So we record the closing stocks here as well. And whatever the direct expenses are, it would be noted here. And then we record the gross profit or the gross loss, because here we have noted all the expenses and here we note all the incomes. If our incomes are more, say it is 5 lakh, and our expenses are less, for this is a total of 3 lakh, so the 2 lakh rupees would become the balancing figure, as we have to balance this particular account, because debit should always be equal to credit. So technically in this case what will happen is we'll be either having a profit or either we'll have a loss. So in this case, the correct answer would be the closing stock is basically shown in the trading account and it is shown on the credit side. Now, the second point is, if a good amount of stock is left, there are two things that is done. One is, in case of closing stock, there are two treatments. One is, under trading account, we say this is what we are left with by the end of the year after selling the goods. And the closing stock can be treated as the inventory by the end of the year. So that is something which we define as inventories. So we can take it in the trading account, but here we can say it is a part of the balance sheet as well, considering the fact it's an asset which is not sold yet, but it would be sold in the upcoming future. So technically we can say that asset is to be recorded accordingly. Next, the revenue expenditure is okay. Along with this, if I'm saying it's an asset, it would be shown in the balance sheet. That is the position statement of the organization. On the asset side, we will show the closing stock. Next point, the revenue expenditure is redirected to the following accounts: profit and loss account, balance sheet, partly to the balance sheet, partly to the P&L and trading account. Revenue expenditure is redirected. If I say that revenue expenditure is to be redirected, then what would we do? See, revenue expenditure is the expenditure that we incur in order to purchase or purchase things, or in order to make things saleable, right? So if we are incurring any rent, if we are paying for any electricity, all these expenses would form a part of the revenue expenditure. So basically the revenue expenditure will always be a nominal account, isn't it? All the expenses are a part of nominal account, because we are not buying anything for increasing our working for the organization. It's not going to increase the capacity of working. It's not going to help us in that way. But yes, it can help us in generating the revenue for the business, isn't it? So it would help in generating the revenue for the business. It's just going to be the expenditure which we are making in order to get income for the business. It will not increase it, but it will maintain the way it is. So it would be included in the profit and loss account. Profit and loss account is a nominal account which records all the incomes and all the expenses. It's a T-shape account. It is noted as profit here and loss account, where this portion is called the debit side, this portion is called the credit side. Here we record all the expenses, here we record all the incomes. How is it different from that of trading account? Here we record only those expenses and incomes which are indirect in nature. That means that are directly not related to the production of the organization. So anything which is not related to the production, it is indirect in nature. For example, rent, for example, electricity, for example, showroom thing, anything that relates to the showroom and all, that would be a part of your profit and loss account, because it's a nominal account, not a real account, right? That is something which we'll record. So either it will have a GP or we will face a GL. So this is profit and loss account. Here comes the next question, everyone. This is based upon a particular concept called cost of goods sold. Under accounting, this plays a very important role. What do you mean by cost of goods sold? Cost of goods sold is the consumption of the stock that we are doing. First is opening stock plus whatever we purchase during the year plus the direct expenses that we have incurred minus the closing stock. So the opening stock, say it's 1 lakh rupees, plus all the purchases that we have made during the year, it is rupees 50,000. The direct expenses, we have no clue about that because the expenses are not incurred. This is the formula. And the closing stock is basically 60,000. This is similar to the fact I got 10 pens, then I bought 20 more. So by the end of the day, I should have 30. But somehow instead of 30, I have hardly 4 pens left. That means out of 30, 4 pens are left. That means 26 are consumed, right? So it's just like that only. In terms of goods, we say 1 lakh was already there. We got 50,000 more, but by the end of the day, we're just having 60,000. So in this case, the cost would be what amount? It would be 1,50,000 minus 60,000. So basically it would be 90,000. The cost of the goods is 90,000. While it says the gross profit is 10% of the sales. If the sales is, let the sales be X. So it is X minus sales minus the profit. That is 10% of X is equal to the cost. If we eliminate the sales minus profit, that gives us cost. So if the sales is of rupees 1 lakh minus the profit is of 90, profit is of 10% now. So I'm sorry, I just calculated the entire part orally and then I got the answer. Let me just show you how did I calculate it. It is going to be X minus 10%. That means 90% of X is equal to 90,000. So X is equal to 90,000 divided by 90, which will give us 1 lakh rupees. So if it's 1 lakh rupees, then kindly note down the 1 lakh rupees. Okay, I think now it will be visible in a better way. So once you know that cost is 90% of something, so then the entire amount would be rupees 1 lakh. It's just based upon the basic concept of unitary method. If the total amount is 90% of something, then what would be 100% according to this question? Right? Moving on to the next question. Here the sales is of 1 lakh 1 lakh. So if the sales is of rupees 1 lakh, when X is equal to rupees 1 lakh, so the profit is 10% of it, which is rupees 10,000. Pure using of two formulas. Formula number 1, that is cost of goods sold is equal to opening stock plus purchases plus the direct expenses minus the closing stock. Secondly, when we talk about the other scenarios, that is related to the fact, it is COGS, and then the second one that we know about is the profit is equal to sales minus cost of goods sold, that is COGS. Next point. Okay, this is basically regarding depreciation. There's a company called Abacus Limited. It follows a specific method called written down value method for depreciation. That means to depreciate or to reduce the value of an asset. It uses a method called WDV, and it uses year after year. Every year they do the same method. Is it consistency? Is it convenience? Or is it comparability? Or is it all of the above? Since they are using a specific method to do that particular task, and that to year after year, it's not even changing at all, then what's the particular thing about it? It is basically being consistent. If we use the same method, that is consistency, though other things are also there, but using the same thing year after year and it is being highlighted, that is consistency, everyone. Right? Consistency means one particular method, but remember, consistency doesn't mean only that particular method is constantly in use. Consistency basically means if we change the method from A to B, then if we change that method from method A to B, we won't be having any troubles in that. That means even if we change from method A to B, then we continue with method B. We will not stop here. We will move towards the next method and we'll use it accordingly. That is what this particular period is about. This is the entire topic there. So method, even if we change, we will not change it for the sake of it, that we will keep on changing it. Even if we change, we will stabilize the change. Next point, an example of the preliminary expense is revenue expenditure, capital expenditure, deferred revenue, or they are capital in nature. Preliminary expenditure refers to that expenditure which is incurred because it is incurred before the organization is formed. So if any organization is in, the expenses incurred which is before the organization is formed, it's called preliminary expenditure. And if we have the preliminary expenditure, then how do we deal with it? The preliminary expenditure would be taken up towards the area of deferred revenue expenditure. There are different kind of expenditure. Revenue means day-to-day expenditure. Capital means the expenditure which is basically done to buy an asset. And deferred revenue expenditure is the expenditure that we incur to get the benefits over the period of time. The benefit is basically distributed over the years. That is what we will define as the preliminary expenditure or preliminary expense. It is called a deferred. That means the postponement is there. So that is postponement of the expenditure over the period of time. That is what we define as deferred revenue expenditure. Next point is, what is interest on drawings? The drawings which we do, see, if I withdraw a huge amount of money from the business, then what will you do? You'll threaten me that if you're going to withdraw such a huge amount of money, then this is it, this is not allowed. Then what will you do? You'll ask me to pay interest on it. You'll ask me to pay interest on it as a penalty. Then what will you do with it? Will it be shown in that particular capital account? Will it be shown? Okay, this is basically partners capital account. I think we would leave this particular topic. Let's just the question doesn't relate to your examination point of view yet, so I can suggest you that just understand the term. Under drawings, there is a particular term called interest and drawings as well. Whenever we charge interest on drawings, it would increase our drawings. So both of these would be debited because drawings is increases because of interest on drawings. So in this case, the correct answer would be, in case we are asked that what would be the treatment for interest on drawings, it would increase our drawings further. So in this case, both of them would have a debit nature, and this amount is basically interest on drawings is a nominal account because we are charging interest on drawings. That is an income for the business. Okay, so this is where I end my session. So if you're looking forward to what's the JAIIB and CAIIB examination, so kindly hurry up as the time is passing by, and the opportunity to get our courses at the lowest price would also end very soon. So if you're looking forward to our classes, you can look forward to the JAIIB and CAIIB Mahapacks. You can look forward towards our JAIIB CAIIB Ka Mahapack, where you will find all the details regarding the JAIIB examination. Double validity is going on, and if you purchase the JAIIB and CAIIB Ka Mahapack, which means you have both JAIIB and CAIIB 1100 live hours, 303 test series, 905 videos, and even ebooks which are up to 328. All the updated classes would be available to you. That means not only bilingual, but even the English medium classes would be available to you, revision batches, MCQ batches, and whatnot. Everything is available for you at your disposal based upon your preparation. You can pace up or you can slow down, as you have 2 months of time period to prepare through this. So if you're looking forward to our classes, then hurry up and you can use the code Y541. The offer is basically ending soon. So kindly go ahead and check it out on our website or in our app to avail the benefit now. It would cost you 10799.20. That is at 81% discount. That means dual things. That means you have double validity, plus secondly you have also got a discount of up to 81%. So hurry up and